This week on Moving Markets, Malaysia's state of emergency on the back of a second movement control order spooked equity markets. CPO prices continue to inch up, with Plantation stocks moving in tandem, but how much higher can it go? US tech companies come under scrutiny for banning President Donald Trump, while Bitcoin touches record levels once again. On Tuesday morning, markets were taken by surprise with the news that the Yang di-Pertuan Agong had assented to a national state of emergency until August 1st in order to better curb the spread of COVID-19, just a day after the Prime Minister had announced a second movement control order. In an immediate knee-jerk reaction, the FBM-KLCI fell, losing more than 1% by midday and falling below the psychological 1600 level. However, an address by Tan Sri Muhyiddin Yassin later in the morning saying that this was not a political coup calmed investors, and the burst clawed back some of its losses in the afternoon session. Recovery in the markets was helped by the fact that more sectors had been designated as essential services than during MCO 1.0 in March last year. With that, economists have projected that this time round it will have a slightly less severe economic impact than they initially feared. So the hope is that the marriage of this emergency and MCO will bring COVID-19 under control and remove any political uncertainty. But will it achieve that goal? Does this move make Malaysia less appealing to foreign investors? Well, judging by the FBM-KLCI, market reactions have been rather muted so far. As investors begin to turn their attention away from healthcare stocks and other COVID-19 winners, plantation counters have started to see some inflows. This rotation is on the back of high crude palm oil prices, which hit 4,000 ringgit per tonne at the start of the year. Prices have since moderated a little to just below 3,700 ringgit per tonne, but still up close to 40% compared to last year. In fact, almost all Malaysia's major plantation players are trading higher on a one-month basis, despite worries over the increased international scrutiny that some of these players have been seeing. FGV and Siam Dabi plantations are still under a withhold release order imposed by the US Customs Border Protection. This means that all their palm oil and products will be detained at US ports until issues raised by the CBP have been resolved. In these cases, indications of forced labor. But Malaysian plantation stocks aren't the only beneficiaries of the rise in CPO. Singapore-listed plantation companies like Golden Agri and First Resources have seen their share prices rise more than 30% over the past 3 months, while Wilmar International is up 20%. The question is, does this rally still have legs? We might have to watch palm oil prices closely to find out. In the wake of the US Capitol riots last Wednesday, several big tech companies have banned the accounts of President Donald Trump. Twitter issued a permanent ban on Trump's accounts, which they said was due to the risk of further incitement of violence. Facebook has also suspended the president's accounts until President-elect Joe Biden's inauguration on January 20th, saying they fear he intends to use his time left in office to undermine a peaceful transition of power. As a result, shares in Twitter fell 5% on Monday morning, while Facebook fell around 3%. An alternative social media network, Parler, has also been forced off both the Apple and Google online stores, while Amazon cut access to its servers. Why? Because Parler has recently become a favorite of conservatives who take to its unregulated platform on fears of censorship from big tech companies. Big tech has been a winner in this COVID-19 era, but going forward, can we expect more scrutiny of these companies, with Democrats controlling the White House, Congress, and the Senate? And Bitcoin, after pulling back from the incredible $40,000 mark seen last week, has once again climbed back to that record high. Between Sunday and Monday, the world's largest cryptocurrency tumbled about 25%, where it remained for most of the week before jumping as much as 7.5% to $40,094 yesterday. So while Bitcoin has seen incredible growth on a year-on-year basis, clearly it's just as volatile as ever. And that's what's been moving markets.